We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Dale Pinkert, Head of Trader Development at TradeGate Hub and the host of Face Podcast. He's got 40 years of trading commodity futures experience and FX. How are you today, Dale?
Great day, Tom, to be with you. Fed came in today, everyone holding their breath. Everyone knew that 75 basis point hike was baked in. So the real question was what was going to happen in the press conference. And Powell did not give the doves an inch about committing to only 50 basis points in December. Still data dependent and has to see the whites of the eyes of a lagging indicator as the economy I look at it this way, Tom. Can Jay Powell do what Captain Sully did and land a 747 on the Hudson River?
Without destroying it.
Yeah. So, I mean, that's what he's trying to do. I hope he does. We're all passengers. Mm-hmm. So, so the Fed came out. They were hawkish. I mean, one of the most dramatic moves. I know the dollar came back, but the S&P's really got massacred on this. Mm-hmm. And, we've been trying to rally here for a while. And as I was talking to you off camera, it certainly seems like we have one market, okay? And you could judge what almost every other instrument is going to do based upon what the dollar is doing mm-hmm. and what yields are doing. So yields sold off initially. They're heading back up. The dollar was lower. And looks like we closed with a pretty good gain. And you know what's going to make the employment report even more important, Tom, because perhaps there's a glimmer of hope in wages or mm-hmm. some other factor in the employment report. Maybe we're even weaker than the headline number. And then what the market interpreted that the Fed isn't going to relent will start giving them reasons to do so. And only hike 50 basis points in December anyway.
Well, that's what I wanted to ask you about, Dale. The press conference, as you said, he didn't give an inch to the doves, but they want to be data dependent. So is that the NFP or the non-farm payrolls that we're waiting on Friday? What could be the outcome of those numbers?
Okay. Well, one of the strongest numbers or areas of the economy that Powell is watching is employment. Mm-hmm. And it's been stiff. And, there aren't a lot of people coming back from the Great Resignation. I don't know. I ask every economist, Tom, where is everybody? A couple of years, they were going to be thrown out of their rentals unless they had government support. Mm-hmm. I know everyone got subsidies for a while, but, unless it was, the business forgivable loans for $1 million that a lot of celebrities got and a lot of rich people got, the people that were mainstream getting unemployment insurance and some government support, that's long gone. Mm-hmm. So are they at their mother's house in the basement? They lost their money trading Bitcoin. They're going to have to go out there and do something. And I just think that may end up improving, but it's more of a demographic issue now too. So we're not going to have the same pool of workers that we had before. So I'm always asking myself, why is the Fed making all of its decisions upon something that has a new paradigm working in it? This isn't 1970 where you could just, shut down some steel mills and people will, leave and wait to come back. Now employers don't want to fire people because it was so hard for them to find them. Mm-hmm. The first thing they're going to do is cut hours before they fire them. So, I sometimes I look at my screen and I go, it's like Rod Serling's edition of the Twilight Zone in financial Disneyland. But that's the way we're going. Now, a lot of people are still very bullish a dollar. Tom, and we had this peak here, and I could understand how they could be. And I made a failed attempt at top picking the dollar. Well, it ended up not being the top. It was here when I was on with you, and it worked for a while. And that's something else I want to talk about. When things work for a while, if you're not ringing the register on any of your positions because you're looking for it to be the home run ball move, you're broke, because the only way you get paid is when you book profits.
Yeah.
So, I'm short the dollar here from this failure last week. I took some in before the Fed. Even going back to silver, and I know I want to cover it, especially with what's going on here and the gold. So I was long for this rally. Was it the bottom? No. But knowing and having the discipline to take profits, I did it. So now people are more discouraged, but it was another bottom. I played it. Did I make money? Yes. Did I lose money trying to buy a break? And then really the tip off was a couple of weeks ago. This week, the dollar actually peaked this week, and the dollar weakened. And that's what I was waiting for to give jet fuel to the metals, was a weaker dollar. I said, well, we're not going to have a bull market in metals till we have a weaker dollar. The market gave me what I wanted, and the price didn't respond. There was a day silver came in 30, 40, 50 lower, and the best it could do while the dollar turned lower was get back to unchanged. Gold did the same thing. And I know that we're here to talk about stuff you eat, but to me, it looks like the gold is setting up for a third drive to a bottom down here around 1580. And there's no way that it's going to confirm on the weekly. And the silver would be doing the same thing, a shade under 18, because this is what the market does. It discourages people. Well, I tried to get long silver, and I hear it from people. Oh, you guys are always saying this is the squeeze. This time it's going to be the squeeze. No, this time it'll be the squeeze. Then it comes down here and people go, I don't believe it anymore.
Yeah.
And I think that's going to be a very important low in both gold and silver coming up. I know that wasn't our topic, but
no, we do have quite a bit of stuff to go over. But as you're bringing up, let's just start with silver, Dale. We saw that, I think it was in the last month here, we saw one of the biggest single day gains ever for silver. So did you see that as just pure volatility? What do you see that as a sign of? Being more so a technical guy, do you just see that?
I said to myself, this is it. Okay. I mean, there was nothing not to like about 7% update. It certainly isn't a sell signal to me. Anyone who gets a sell signal on a day like that, except for maybe a little short-term thing, I want their Ouija board. Okay. So anyway, and that's what I was saying. I thought that was it, because I had this breakout here and it pulled back and held. And I said, okay, we're on our way. And but I said, I'll wait and buy a break. I bought a break at 19. And when the dollar didn't help it and it kept grinding, I got out. And I haven't been long silver since, because I think that we're going to get this final washout. Now, I did hold silver issues, and now I'm going to have to go through the wash and rinse process, because, these are long term. They're not leverage, even though gold shares and silver shares can move 20, 30%. It's not leverage. So I'm long this one. And it's acting so good that I think there's a chance that if silver washes out to my lower target and these juniors do not make new lows, because this rally was pretty powerful. This was during that 8% day. And the shares haven't given up as much as silver has. So if silver flushes to new lows, and this one's holding 230, and this one's holding 270, 280 without making new lows, that's going to be a strong tell. I don't think there's going to be many gold shares that aren't going to make new lows, but here's one of kind of a smaller one I own, and there's going to be, I look at a weekly chart. This isn't something I sell into This is something that I still believe is being accumulated. And you see the RSI here?
Mhm.
I don't believe that we're going to confirm this next low. There are some, you might even want to go with the South African if the dollar's peaking, and GDX. None of them are going to confirm on a new low. And in the silver, this did not make a new low with silver here. Let's see what AG does. Maybe AG ends up holding $7, $6.80, and not make a new low.
Mhm.
But we're going to finally have been waiting for this capitulation move in the metals. I think, we could be there in a few days or a week or so to those targets.
So is that just, are you looking at that time frame from a purely technical side, Dale?
Time is tougher, but I do believe in the formation. Sometimes these lines, Tom, that I draw for 3 drive formations, they end up being magnets. So, I don't see why we couldn't get another touch here. But look at the position of the RSI where it's at, because we've already had one divergence right here, and a new low is not going to take out this divergence. So I think this is getting people to capitulate in a lot of different markets for important buying opportunities, including the grains, which I want to talk about. And the dollar, I think that there are a lot of people saying new highs right away. If we get what I think we might get in employment, I think that there's a chance that the dollar doesn't make a new high. And, I know a lot of people are talking 116, 117. My work says it should, see, because this is a confirmed high. So that's a possibility. In fact, I can say this, the pound won't make a new low. This has had all the hallmarks of a climax sell-off. Now, if the dollar doesn't make a new high, the pound won't. So maybe you could buy the pound at 107, 61.8 or so, adjust these fibs. But the pound has had the best rally out of it, unless I go to some of the emerging market currencies. But the dollar has a stronger pattern right now, I think, than the yen. So I'm not completely convinced that we're going to make a new high in the yen. And I'm not completely convinced that we're going to make new high yields. The yields didn't respond that greatly. Look at the 10-year today. They reversed, but they're still quite a bit off the high of the move. I think we could have a failing rally here, maybe up to 420 and then roll over. And that would be negative for the yen as well. So I'm not looking for 450. I'm looking for this to be a failing rally at 420 and then 350 and then 290. So I'm actually looking for a pretty good move in yields back to the downside. That doesn't sound US dollar yen positive. It sounds positive the yen, but bearish US dollar yen.
Well, as we're on that subject of yen and pound, Dale, I've heard you say that we're starting to see the beginning of monetary history being made with those two currencies, especially. So, is it possible that the US somehow, let's say, works with the Bank of Japan, considering that they hold the most US treasuries, and if they're selling treasuries, that puts downward pressure on the dollar?
Of course they do. They didn't want to come in, or at least publicly admit that they're intervening directly in the market. But last Friday's, or the Friday before's release of the Wall Street Journal article that they're starting to consider the speed at which was a leak from the Fed when the Bank of Japan had come in for the third time to intervene. That was not a coincidence in my view. To me, that was not publicly stated, but that was an intervention by just leaking an article. They haven't had to come in with their money. I think that the Fed actually, if they want to keep raising rates, a weaker dollar would give them more cover to do so, because they could, because there'll be more nominal inflation. And if they continue the wrecking ball, just like with Credit Suisse, they have swaps. Who's going to bail out every financial system in the world? The one with the wrecking ball.
Mm-hmm.
So it may even be in the, I'm sure that, the BOE was on the phone with him. Lagarde is on the phone with Powell. And I think that they're coordinated. At first, I thought they were going to do something like the Plaza Accord a month ago. And then it sounded like, well, it's every man for himself. And the Bank of Japan was on their own and the BOE was on their own. But when they came out and released that article, that was a very inexpensive intervention for the Fed, and it worked.
Mm-hmm.
So I still think that they coordinate, because who's going to be putting out credit swaps for any other bank failures in Europe or anywhere else? Is it going to be the ECB or the Fed? I think the Fed has shown its hand by when we had some talk about Credit Suisse, right?
Mm-hmm.
And they did the same thing in 2008. They are the lender of last resort to the world, not just to the U.S., in my opinion, Tom.
Mm-hmm. Yeah, it's interesting to think about, how connected all of this ends up being. And again, you and I were kind of speaking before we hit record here about the ramifications of this historic rate hiking cycle, and the fact that we very likely haven't seen the actual damage that is going to cause as all this debt ends up rolling over, right?
Yeah, and that's going to take time to filter through. People are walking away from their auto loans now, but people complain about how weak the stock market has been, and they've been waiting for a crash. Well, they didn't have to wait for a crash. All they had to do was look at a different asset class. This is a crash. I think we're going to have, I think we're in the middle of a confidence crisis in the treasury markets across the world. I was taught everything starts in the UK. In fact, they were the first ones to raise rates, Tom, before we did.
Mm-hmm.
It was the BOE. So, I think there could be some guys I know that watch the Fed. Do you know Joseph Wang? You ever talk to the Fed guy?
No.
I'm going to help you get him.
Okay.
Anyway, he's talking about that there may be some facilities to come in here to put a floor under the bond market. And perhaps we're going to get some type of bear market rally. If I'm right about the 10-year, the long end should also improve.
Mm-hmm.
So, but this was where the crash was. Okay, right here in the bond market. The S&Ps, under 3,600, I don't know how any bull in the world or anyone would ever want to be long the S&Ps for a while, because this was a real battleground here, Tom. I kept saying, as long as we hold 3,600, you had a couple of days where it closed under it, but they couldn't put 2 days together. I like to see more than 1 day to confirm that a breakout or breakdown is happening, and they could only put 1 day together, and then it would be back above 3,600. And then this week, I still think has a chance to be a low. I'm not sure if we're going right to new lows or not, but we start closing under 3,600. Just a measured move is going to give you 2,500.
Well, and interestingly, as you're mentioning that, I was having a conversation yesterday about really the strength of the stock market and people's perception of their 401ks going into the midterms, and how that can actually affect, let's say, people's feeling on the way they vote, right?
Yeah. Well, you know what? I wouldn't only be worried. I think what's happening in the UK with their pension crisis, that there were many of the same schemes here in the US because of financial repression, that these guys that have to generate 8% a year that couldn't get it from a bond went out on the risk curve. And if I was, I'd be not as worried about my portfolio in my pension. I'd be more worried about the solvency eventually of my pension. I don't know what people could do. They probably don't have options like, oh, I want to cash out of my out of my retirement. But I think that there's going to be a problem here in this country, and that I can't think of anything else that will probably do a bailout.
Mm-hmm.
But yeah, I think that's down the road, a pension crisis. And, it's like with this move in interest rates, like the tide went out, Tom, right? And it's still going out. And, you don't think there are damage financials of banks if governments are having trouble with paper, or corporations that use their profits for going out and buying stocks, or went out and borrowed in the corporate bond market, that when they roll, most of them have another year. But if rates are up here, there's going to be solvency issues with corporations too, because how are they going to service that debt when they have to roll it?
Mm-hmm.
And, that's what's happening in governments right now. Can we continue to pay the interest expense on the debt with interest rates here? It was, not easy when they were zero. But as a percentage of tax receipts, they're becoming, the biggest chunk of it.
Mm-hmm. Well, and especially if we go into recession and tax receipts end up falling, that's just another, let's say, nail in that coffin, right?
Yeah. So anyway, everyone's saying the U.S. is the cleanest dirty shirt. I don't know. You look at this dollar monthly, and it's parabolic, and sometimes that's when markets peak, when they look the best. So
of course.
I'm gonna give the dollar a shot on the short side after the employment number up around 112.20 with 1370 stops. And I kind of have imagined a descending triangle in the yen up here, that maybe, we had this bounce, and maybe we have an equal bounce up to, 150, 150.50. And I'll be wrong over the high at 152.
Mm-hmm.
So, once a host asked me, well, Dale, what will change your mind about the scenario that you've described? You know what my answer was?
What's that?
My stops. That changes my mind. So always have, have a change your mind order in there, huh?
That's an important thing, piece of information to talk about it especially when you're trading actively like this, is to make sure that you have those stops in place, where you want those stops to be, just in case that does go against you, right? Because Tom, it's not always going to happen the way that you plan it out.
It hardly ever does. So, but, there's only one thing we could control in this business. It's risk.
Mm-hmm.
We can't, there are things we could do to manage a trade, take partial profits after the market's moving our way, trail your stop to break even, or a profit stock. But that's the only thing that we could do, is manage risk and be patient,
mm-hmm.
and wait for high probability trades. I could tell the difference when I have high conviction and when I'm not as high conviction. Like right now, I'm giving prices about where I want to sell something or where I want to buy something. When I have conviction, I say, just buy it.
Mm-hmm.
Just sell it. I'm not price sensitive. Okay, it doesn't happen often. It happens occasionally, where it doesn't matter if you pay up 30 cents, 40 cents, or you have to hit the offer, you have to hit the bid. You just want to be in.
Mm-hmm.
And, I think that people should ask themselves that, if you really believe in the trade, what's the difference about where the price is right now?
Mm-hmm.
Okay. So anyway, these are medium conviction trades for top picking the yen.
Right.
And because I do believe that we might catch a break, or we'll be able to fade the notes before they make new highs. So I'll try it up at around 420 or 421.
Okay.
And again, my stops will be above 435, because if they take that out, they're going to 450, which is possible.
So Dale, before we move on to a bit more commodity stuff here, how misguided do you think it is to put our faith in the Fed to fix inflation when they caused it in the first place?
Yeah. I've heard people say, how do you give credit to someone that started the fire, their ability to put it out? I'm not confident. Sometimes I think, if I can see, and smart people that you and I talk to about the potential damage that's being done and the type of inflation that the Fed can't control. We're going to talk about the grains, Tom. What does monetary policy have to do with weather or fertilizer or war or famine or drought? The Fed cannot print grain. So how are they going to control that? When they started tightening, did you eat less?
I did not know.
Okay. We talked about it. I get crabby after one meal, 3, everyone's going crazy. But yeah. So, there may be some demand destruction, and, there's shrinkflation in the grocery stores, and it's a burden for a lot of people in it, not just, Sri Lanka and Yemen and Sudan, but right here in the good old USA, there are a lot of people that are really struggling just to get by, that have to make decisions now between meals and medicine. So, kind of heartbreaking. It's not the America I grew up in. I know we always had hard times, but if you were willing to go out there and work hard, you had a chance. And government support actually did support people. Government support isn't enough for people living on their Social Security. So just some things to think about as we're out there hunting opportunities. Maybe you start thinking about, I have a good run in the market. Perhaps there's something I could do for others besides just for myself and how many digits I have in my account. And, could even change your trading when you have the abundance mentality of being willing to help and give, because, it's not just about receiving, it's about both. That's the end of my homily, Tom.
I like it.
Yeah.
Well, it's an important lesson to take a step back once in a while and think about something other than what's going on your computer screen.
Yeah, I have a hard time with people crying about that they're down 25% in their account, where people in Ukraine don't have utilities with winter coming on, and all of Europe, and the hardship of people trying to make it all over the world. So, what I tell people is, why don't you just count your blessings that you have money to risk? Okay. And make sure it is risk capital. If you're trading with your mortgage money, you don't belong in this. And, a lot of people are getting desperate. So they might be trying to do it. Don't try and hit a home run ball with small change. That's my advice.
So Dale, let's kind of dive into a bit more about the grains and beans that you and I wanted to talk about today. You advised traders to buy wheat last week prior to Russia ending the UN deal. So why was this such an important call? And is this an example of paying attention to fundamentals and narrative versus just technicals?
Well, as you can see here, Tom, I depressed everyone because I was talking about the potential of a dirty bomb. Okay, I didn't know it was going to be Russia coming out of the deal, but I've listened to interviews like of Henry Kissinger
Yep.
And then I know this guy that used to work in several presidential administrations that knew Putin, and we're starting to see it now. He hasn't gone that far, but he has I even saw it in print. He has a mindset. The way he de-escalates is by escalating first. He escalates to de-escalate. And, when I was seeing all the progress Ukraine was making on the ground, and how desperate he might be becoming, and all this talk about nuclear, and some people are saying, false flag, it'll be us. Okay, so you don't know what to, you're hearing all kinds of things, but desperate men do desperate things.
Mm-hmm.
And God forbid if it happened, it would irradiate that soil, even if it's tactical, for 1,000 years. And what was happening in the grain market was happening way before the war. I mean, I think this is kind of ironic. The breadbasket of the world of, what was it? The cradle of civilization in Egypt, right? So they're having their dire bellwether climate summit, and they're experiencing quite a drought. And it's one of the breadbaskets. The Nile was a very fertile area, and they can't grow anything there now. So they're having the climate summit there. But this thing that we had with Russia, and who knows, now the deal's on, back on again in 2 weeks, it could be off if the Ukrainians hit another target that hurts them. You really can't believe or trust any agreement with the Russians, in my opinion. And you know what? That wheat that they have there, I was reading. I'm not an ag expert, although I went to college in the middle of the cornfields in Illinois.
Mm-hmm.
I had no idea I'd be talking about grain with you today, Tom. 100 years ago. But that grain that they have has been in silos for 6 months. So they're questioning the quality, and that some of it may not even be fit for human consumption.
Mm-hmm.
Okay. And what I wanted to show, and I want nothing better than a picture speaking 1,000 words, is that the grains were already up 40-50% in price over the prior decade. And I mean, this is only 2021, and here you could see corn at $5. I remember $3 corn.
Mm-hmm.
Okay, so it went to $8. So these prices were going up before the invasion. Okay, the invasion was right here, and corn's had one of the weakest. So here it is, March. Okay, this was a high. This was the invasion here. But as you can see, the market was up quite a bit from that level.
Yeah, and that kind of goes back to that idea of the type of inflation that the Fed is in some ways trying to fight, right?
Yeah, they're trying to fight supply-driven inflation, supply shocks, and I've heard people say you want to solve that, you don't do it with raising rates. It's more of a government creating incentives for people to grow more crops, give tax breaks to people in a housing crisis to build housing. You have an energy crisis, give inducements for oil companies to build out pipelines. And they're not going to solve it by just crushing demand. I really don't understand it. Okay, it's to me, really, what is the real reason? And I'm not a conspiracy guy, but I know it's the only tool they have. But they have to know that it's a supply problem, and is it really worth tanking the economy to maybe be successful? They're not going to bring down grain prices. The only thing that's going to bring down grain prices is rain, mm-hmm. and droughts ending, and wars ending, and rivers that are drying up. the Mississippi, the levels are dropping. We ship a lot of stuff up and down that river.
Mhm.
The great rivers of Europe, the Danube and the Rhine, are drying up. Major transport via vein for transporting goods and grains and everything. So there are just too many fundamentals working against having bumper crops to solve this food problem, and not only in grains, but in softs like sugar and cocoa and coffee. They might have more of an effect on things like cotton. Maybe people will buy less clothing, or maybe they'll switch to hemp. They'll look for a substitute. But, there is no substitute for grain that we eat and feed our livestock. Part of the solution I'm reading by long-term guys, and it doesn't appeal to me, is going to be complete meatless or less meat and more meatless protein sources. So soybeans is protein. Beans are protein.
Mhm.
And, for all you silver guys, back in the 70s, they used to trade soybeans and silver on the same trading floor at the Chicago Board of Trade. And you'll be surprised how they really traded together. If silver is having a great day, beans were having a good day. So I'm kind of keeping an eye on to see if this old school correlation comes back between
Mhm.
silver and beans. But you look at the bean chart, falling wedge breaks out over 15. I remember at the Board of Trade, you know what the chant was? Beans in the teens. Beans in the teens. And we've done that so many times since then. I know people that have counts as high as $25, $30 beans.
Hmm.
Okay. Wheat. I think that wheat can take out this high at 13.50. I actually have an extension line that's going to come in, up at $16. Corn looks great. I'm looking for one more high. So traders that know me know I'm into these three drive formations, and I can see it in a lot of these different markets that they're still incomplete. So I think there's, you still need timing. So here's the short term. This was a gap up, Tom, on the news, and this was the news that the deal's back on.
Mhm.
But here are the lows. So how would I structure a trade? So this looks pretty negative short term, right?
Right.
Well, maybe you have your toe in the water here. But if I just use equality from this break from up here, and I get a break down towards 780, 760, then I risk a close under 7. I risk these lows. So I'm looking to buy a break in wheat. I'm long beans. They act great. I think you could buy them anywhere and hope there's a pullback to 14.5 or so to add on. And corn, I'm just kind of neutral on it. I'm focused on the wheat and the beans. But right now, the beans look the best. And, are we going to have chaos in Brazil? I know that
Seems like it's starting.
But he said he would turn over power, but, it kind of reminds me of what we went through. Also, you have instability in South America and Argentina. They're a big major wheat producer, but here's just some of the numbers that they're projecting that next year in Russia and Ukraine, and they're 28% of the world supply. They're looking for production to be down 35 to 40%. That's minus 30 tons.
Jeez.
Okay. The hot summer we had in Europe and that we had in India, that shaved 10 tons away from the supply. And as I said, fertilizer prices are still elevated. So, a lot of people have done very well in the fertilizer stocks. Talked about La Nina. We're a hope for the world, but we just finished our harvest. There is a crop report coming out the 10th. That should be a market mover, as it was in Trading Places. Remember the crop report on orange juice and the movie Trading Places?
It's been a really long time since I've seen that. I'll have to go back and refresh
you
my
do.
memory.
You'll crack up. Anyway, you got to put that on.
Okay.
And we're also getting export controls. I think India said, we're not selling our wheat.
Mm-hmm.
We're keeping our wheat. And China is still accumulating. They've been accumulating. I've talked to grain people for the last 5 years. They have huge stockpiles of wheat. They're going to need it so that people could have their wheat eats while they're locked down everywhere in the country. Mm-hmm. So, there are fundamentals that are very supportive. I wish things could turn around. I don't like a bull market in grains either, because I know what it implies. Mm-hmm. And this is going to make the Fed's job even more difficult, because they can't control this. Mm-hmm. They could control silver and gold, I think, a little bit more than they could control what Mother Nature controls.
Right. Another telling commodity that in some ways it's either said as a leader or a lagger, depending on how you look at it, is copper. I was going to say copper. There seems to be so many things stacking up on either side. What's your outlook for copper?
Last week I was positive. I've been watching Freeport, but this action right here just, I don't know, it just doesn't look good to me. And I think it's going to wash with silver and gold. And that's probably not a good sign for stocks, but might be a good sign for bonds finally. So I think we're headed lower. Last week I thought we had a breakout. See what silver did? They do this everywhere. Who would have stayed short copper this day? I was tweeting about a breakout. So here's the point. I don't walk on water. No one does. The difference between pros and amateurs are pros know how to lose money, so they have money left to be right with. So if my contingency is a breakout and the next day it held it, but then this day we're back underneath it, negating it, should I stay long? Because this is what got me in, and it should be what gets me out. Mm-hmm. That's why they call me coach, bro.
Well, that's a really important tip and something to learn from. And I would say analyze and have a plan for how the trade should be progressing before you enter the trade, right? It should break above whatever it is and continue at least before it rolls over, right?
Know what your why is. Why am I doing this? Why am I compelled to take risk? Is it a trend line? Is it a moving average? Could be anything, whatever you use. Mm-hmm. And then if the why is negated, that's where you're wrong. So that's where you have to get out. And you also need to know what you're looking for when you're right. Mm-hmm. So you can ring the register or take part of it off. So if you have to answer all of those questions before you enter a trade. Mm-hmm. Don't enter and then, I'll figure out where I'm going to put my stop later. Mm-hmm. Okay. It's a one mistake business. So, copper right now, I thought we were going to break out, Tom, but when I look at my RSI work, I think it's actually going to be one of the weaker metals. I still believe that the white stuff will lead, which is silver. Mm-hmm. And even though we're heading down, look how much better it's holding up than gold. Gold's almost there, right?
Yeah.
We're almost at this breakdown, right? Silver, is still a couple bucks away, right?
Yeah.
And the gold silver ratio is hanging on by a thread here. It looks like a head and shoulders. And if we ever get this close under 83, you're talking about the 70s. So the gold silver ratio, in my view, peaked here at the 50% level, and we're on the verge of it negating and turning down. That will take it back down to these levels. Eventually, I think we could see upper 40s. So my big picture, even though I'm looking for one more washout, my big picture is the people that talked about 2,500 gold, Tom, that I know you've heard from Goldman and many people that you've interviewed. It's kind of there's Elliott wave targets there. So just extrapolating that, I think the gold silver ratio could go into the 40s. At 2,400 gold, that gives me $60 silver. So that's my long-term objective in silver.
Gotcha.
Over those previous 50 levels. I know some people are looking for higher, but I think we could, after this low, I think we could be there in 2 years. So,
well, even if you want to be, a bit more conservative about it, that seems to be a fairly reasonable target.
62.
Yeah. I meant 2,500 for gold.
Oh, gold.
But as you're saying, the extension of that, if we get down to 40 on the gold silver ratio. Yeah.
And so that's my take there. And is there anything else you want to cover with me?
There actually is, Dale, but maybe before we wrap up, you're the Forex guy. So I was going to ask you if there's a particular draw, let's say long-term for you in the commodity producing currencies like the Aussie or Canadian dollars.
The Aussie's
acting, if you could explain to us a little bit about that.
Okay. So I do believe there's going to be a major bottom in Aussie. I don't know if we're there yet, especially after today. At $61, see how we confirmed here on the daily? I'm looking for about 61.10 just to take out this low. And the Canadian dollar, maybe one more drive to 140. And, it could also stall at 38 and put in a right shoulder. That Canadian, so copper and Aussie, right? So if I'm looking for one more washout in copper, we could get that flush in Aussie, but I think it's a long-term buying opportunity. I mean, compared to euro, when you look at the Aussie, look how much stronger it is. So the euro's already taken out this low.
Okay.
All right. And here, I don't know if we're 61.8 or 78.6, but, it's not making, with the dollar making 20-year highs, why wasn't the Aussie making 20-year lows like it did here? Okay. And the same is true in Canada. Okay. It might try 140 again. I'm not looking for new highs. This was a COVID high. So, and this is a number. If you just want to wait for something that's saying Canada is doing something wrong, look at the confluence I have here at 135. It's a neckline. It's a major pivot support line with the 200-day coming in here. We close back under 135. You're looking at 131, 130. So 135 is where Canada turns bad. Pick your spots if you want to sell this rally. It's either going to be a marginal new high or a right shoulder. But that's the way I'm looking at it. I'm not looking to get long USD CAD at 137. Yeah.
And interestingly, I think the Bank of Canada was raising at 75 basis points, just like the States was. And this past increase they did was actually only 50 basis points. So they're already starting to back off the gas.
Yeah. And look, and the Aussie, they really need China to come back on board. And copper needs China to come back on board. Something to show, and I don't know if the Chinese stocks had a great day yesterday, but you just keep hearing about more and more lockdowns. I don't think anything changes. Australia needs China for an export market, and I don't think anything changes until they try and reopen. Some people say they're never going to reopen.
Well, I wonder how that's possible, right? How that continues to affect their economy, their currency, everything.
maybe that's how they preserve food and energy and everything that's short. You keep people locked down. And, I remember I was talking about this several months ago. They had a new policy like small plate or clean plate where they were reducing the portions well ahead of this move in the grains. Did you hear about that?
No,
You're shaking your head. Anyway, they were trying to get their population more accustomed to smaller servings. I wouldn't do real well there. I once ate a lean cuisine, Tom, and I licked the thing. I'm still so hungry. Anyway,
I did see a thing the other day though that I believe there was some type of COVID exposure within Disneyland over there, and then they locked everybody in Disneyland for the week or something.
People were running for their lives to try and get out there. It also showed a plant where they were making the iPhones, and it looked like tens of thousands of people trying to escape. So anyway,
crazy stuff.
Don't just count your pips, count your blessings.
Absolutely. Well, solid advice there from the Forex Stop Hunter, as he's known on Twitter. And tell people where they can check out more of your work, Dale.
All right, at TradeGateHub.com, sponsored by TradeView, and it's a free room. And we don't upsell subscriptions. Sponsored by a broker, so maybe you want to check their spreads out, maybe open an account. And I also do a daily show for Forex Analytics. It's called Face. And every day, a bunch of guys that are on the team get together and throw out our ideas to the community. That too is free, but they do sell a subscription and prop trading.
Perfect, excellent, Dale. Well, I appreciate you coming on today and sharing your thoughts with us.
Great to catch up, Tom. We're all going to get through it. This too shall pass.
Absolutely. Thanks for that. Thanks for that perspective, Dale.
Adios, buddy.
Take care.
Thank you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.